Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity that you have, your attention. We promise to do our very best to give you a return on it. Today we have Alex Black, Executive Chairman for Rio2, a gold developer down in Chile. Alex has had 2 successful projects in South America, and now he's working on his third, the Fenix Gold project. This is a large open pit, low grade heap leach mine. Alex, thank you for coming on the show.
Thanks for having me, Steve. Good to
Yes,
be here.
sir. Yes, sir. I'm pretty excited about this one. We have been following your company for probably 2.5 years or so. Go ahead and give us a little bit of background in your experience. And you came to South America in your early 40s. You've already done two successful projects with a lot of the same team. Maybe just kind of give us a couple minutes on your background, and now you're working on your third.
Yeah, I mean, you're right. I came to South America, Peru specifically, back in 2000. It's been nearly 24 years now. And yes, you're right. I was in my early 40s. Now I'm in my mid 60s. But did a couple of things in the resource space. Back in the early 2000s, it was Chariot Resources with a copper project in Peru, which is now in production, belongs to a couple of big companies. And then after that, I moved on and established a company called Rio Alto Mining. And we acquired the La Reina project in Peru, which was a gold oxide heap leach project. Put that into production, did very well with that from an operating perspective. Then we acquired Saladin during the process, and their Shahuindo gold project in Peru, which we also put into construction. And but during the construction phase, we were approached by Tahoe Resources, who made a pretty good offer for the company of 1.2 billion Canadian. And we decided to sell the company. I was with Tahoe for a period of time, but it just didn't work out. And I decided I wasn't done, so I formed Rio2. And most of the people, the operational people that we had within Rio Alto Mining, were let go by the Tahoe guys, which was good for me because I picked them up straight away. And so we've got the same development team that put La Reina and Shahuindo into production within Rio2. Then in 2018, we were looking for projects. We came across Atacama Pacific, actually in 2017. We consummated a deal with Atacama Pacific in 2018, mid-2018. They had what was then called the Cerro Maracunga gold mine or project in Chile. We decided to rename that to Fenix Gold only because the Maracunga name is used quite extensively amongst a number of projects and in that area. So we wanted to distinguish the project from that. So we renamed it Fenix Gold. And from that point, we completed an EIA or baseline studies EIA. And then the nightmare started for us when there was a change of government in Chile that really, all I can say is, interfered in the process for the adjudication of our EIA. So people understand, EIAs in Chile are done at the regional level. There's no federal government input. It's all regional government input. And so, unfortunately, this new government came into power. They had a very big, initially, a big sort of environmental / almost anti-mining stance. And our project was one of the first new projects that was put on the table. And of course, they latched onto it and said, no, we're going to stop this from happening. And then, we got into an appeal process, which is what is the required steps to take once you get rejected, which was in front of a committee of ministers, which happened in December, mid-December, 20th of December, I think it happened. And lo and behold, we were approved. So after 18 months of being stopped, we were approved, and we did nothing extra to validate the reason why we should be approved. All we did was justify that we had followed the entire process as prescribed, that there was no impact on, and this was all centered around chinchillas, right? So there was no impact on chinchillas at our project. There were chinchillas identified by us in a valley next to the project, but not, not going to be influenced by what we do at the project. So, it was typically a political scenario that we just ran into, and it really did a lot of damage to our company, because our share price at the time when the decision was made in mid 2000 and I'm lost track of time, but
I could pull it up right here, Alex. We can see that we were just coasting right along, and right around here, we're like, ooh, we're 18 months from production. And this is when the Chilean big thinker said, oh, no, you're not. We're worried about these chinchillas right here.
That's a great graph to explain what happened.
Yes, yeah. And then you've slowly been kind of grinding sideways, and now, boom, that's when you got the approval. So it looks like we've kind of reset the clock, right?
Yeah, but still, if you look at that graph, we've only recovered up to half of what we lost.
Yeah.
So there was a lot of damage done. I can't stress enough, and I always talk about this to shareholders and on social media, the value of time in relation to money is huge in this sector, right? So being delayed 18 months, then going into high interest rate environment, obviously, yes, a high gold price environment, but the risk appetite for gold juniors is just disappeared, right? I mean, well, nobody wants to take the risk. And there's a lot of competition, as we all know, with lithium, with uranium, with Bitcoin, and with lots of technology and lots of other things. So, but that's impacted us because we haven't been able to recover what we lost quickly anyway. I think over time we should be able to recover it, but it's just sad, and it's been, a tough time for shareholders. I've dealt with a lot of emails and inquiries and discussions, etc., with shareholders about how we get out of this. And now all I can say is, we've got our approval, and now we've got to claw back what we lost and get this project advanced as we were planning to do. And the good thing is, this is a development project. The EIA is approved, so we can now progress to financing and eventual construction of the project.
Okay. Well, you did have to build just a little area for the chinchillas, and make sure that they're going to be nice and taken care of while you're doing your mining out there. So
Brilliant.
I like the playground you built for them.
I can't believe this sort of stuff and the memes that I've seen on Twitter in respect to chinchillas. I mean, it's been a fun part of going through this whole painful process, and seeing that people do have a sense of humor related to what we're going through. And obviously there is a funny side to it, probably perversely, but I love that. That's a great image.
It took me way too long to make that to not bring it up, so I had to pull it up.
That's a great image. Good stuff.
Okay, so what I hear you saying, okay, you've had two projects in the past, Chariot and Rio Alto, and Rio Alto was a very similar project, right? A gold oxide heap leach, and you were able to take a lot of your team from that successful project and bring them over here to Rio2, correct? And yeah. What are some of the similarities between those two projects?
Okay, so what we had in Rio Alto were two gold oxide run-of-mine heap leach projects. Run-of-mine means you don't have to crush, right? So you blow up the material, you put it in a truck, take it to the leach pad, and you leach it. And if you've got the right characteristics, metallurgically, and also the ability to fracture the material into, smallish sizes.
Yeah, that way you don't have to break it down anymore. Yeah.
And have to break it down. And if we can get it down to 5 to 10 inches, and with the characteristic of the material, it's porous and it allows the cyanide to leach through the rock, you can get very good recoveries. And in our case, we're planning on achieving an overall recovery of about 75%. In the case of La Arena, it was about 85%. Shahuindo, I'm not sure now because we never took that into operation. It was Tahoe and now belongs to Pan American Silver. So we know how to do run of mine oxide leaching. And so when we saw the Fenix deposit, when we acquired Atacama Pacific, we thought, wow, this looks pretty similar. There's a lot of interesting similarities to this. At La Arena and Shahuindo, you have epithermal gold related to intrusives. What we have at Fenix is a brecciated volcanic. And so when you look at photos of Fenix, and you will see a couple on our website, it's an old extinct volcano. And you're going to show one now? Good man. Oh,
there
well,
we go.
So there it is. You can see it. It looks like a volcano.
It looks like a giant volcano.
That's it. And so it's an extinct volcano. And the interesting characteristic about this, as opposed to other deposits in the Maricunga region, is this is entirely oxide. The deepest hole is 600 meters below the surface and still in oxide. And that's good because a lot of the deposits in the Maricunga region are oxide leach cap, transition zone, and sulfides, and usually associated with porphyries. Not the case here at Fenix. So it's a different animal, but that lends itself to simplicity. And what I like about the gold industry, if you can find the right deposit, is it can be a simple business, right? A very simple business. And so that's what we have here. We've got a very simple deposit. The CapEx, we did a feasibility study that was filed sort of in October last year, updated all the capital costs, etc. I mean, the remaining capital that we have to spend on this project is 135 million US, which in relative terms, and I've been looking at lots of gold projects belonging to developers at the moment, we're way down on the capital intensive graph from a point of view of comparatives. So the lifting, what I call the lifting, which is the equity raising and financing that we're going to have to do for this project, given everything, I mean, because the world's changed, but given everything, should be relatively straightforward. But, we're still got to climb that mountain yet.
Okay. Yeah, maybe we can move on to numbers. Market cap and cash position right now?
Oof. Market cap, I think, from a US dollar perspective, is about 70 million. Cash is just under 5 million US. We did really well. I mean, and I think a lot of shareholders and people that have been following us will know that we did no financings during that 18-month hiatus. We internally funded ourselves by selling some non-core royalties and also clawing back some tax credits in Chile. And we cut back our G&A dramatically on this happening. So we did quite well. And, going forward, we're probably going to have to do a small financing in the not too distant future. When I say small, maybe 5 million US or something like that. And then do the equity financing for the project once we know what the other financiers, when I say other financiers, is banks or funds or whoever is going to finance us, and we're going through that process now, what potential equity component may be related to that financing.
Okay. Do you, so 5 million in cash, is the deal still on for 25 mil from Wheaton Precious Metals at approval of the, okay.
Yeah, technically it is. I mean, what happened was that we signed up a deal with Wheaton back in early 2022, right, in anticipation that we were going to get our EIA approval and we were going to roll into production. That was for $50 million, half of which was advanced to us on signing. And then the other half was to follow the EIA approval. And of course, that was, stretched out over a long period of time. We now have to sit down with Wheaton and go through the terms of the contract, not for the money side, but really for the fact that we won't be delivering any gold to the gold stream that we committed to until potentially the end of next year, right? Which is 2025. So yes, technically we should be able to draw an additional 25 million from Wheaton when we want to, since we've got this approval. But we're going to wait and see how we can renegotiate this stream with them, and also what the rest of the financing is going to look like, which we never got to in 2022. We're now working with Endeavour Financial, who are our financial advisors. They're doing a great job. Now that we've got approval, we will be sounding out various lenders, etc., in respect to financing this project.
Okay, so if someone was interested in, financing without being retail, what would you say to them?
Oh, money's money. Look, I think what you're seeing in the market and what people are expecting these days is potentially for a strategic to get involved, right, in a mining asset that belongs to a junior. Could that happen to us? Maybe. I mean, I don't know. If a fund or a strategic was to say, look, we'll give you X dollars in towards the equity component of your financing, we'd have to listen for sure. And so yeah, we're open-minded. I think I've said that in public before, that we're open-minded to all sorts of options as far as financing this project goes. I mean, unfortunately, we're talking about $135 million in total. That's including working capital, including contingency, etc. It's not a lot of money, but it may as well be, $500 million, because it is still hard work, and this junior gold market is not easy. It's not easy. Okay.
Well, maybe we'll have a big kick up in gold price, and that'll spur some interest.
Yeah, I think if we see a new level, and gold's tried. I mean, it's still above 2,000, so we shouldn't complain, and producers are making money hand over fist. So it's a pretty good environment. The thing is, if we see gold move up $500 from where it is today and stay there for a period of time, I think you'll start to see maybe a shift in sentiment. But I don't know. I don't see it yet.
Yeah. Okay. So as far as some more of the numbers, measured and indicated 4.8 million ounces, inferred 1 million, proven and probable 1.8. So you've got
yeah, and that's 1.8 on the starter project, right? So what people got to imagine is that, let's say that's our reserve, and we mine to that 1.8 shell. Underneath there, we've got nearly 3 million ounces, and I mean right underneath it. Now, the reason it's only 1.8 million ounces is because our starter project anticipates a production throughput rate of 20,000 tonnes a day of ore to pad. And that goes on for nearly 17 years and produces, let's say on average, about 100,000 ounces a year. So, that's okay. We do it at an AISC of about $1,250 at this stage. Our biggest input costs are labor and fuel. Let's see what happens. But one thing I've been talking about is that this year we'll also look at an expansion study for the project. And where we imagine this project going from is from 20,000 tonnes a day of order pad to 80 to 100,000 tonnes, so 4 to 5 times more. And technically it should withstand that, but the biggest constraint on that is water. And in our first phase of production, we're trucking the water to the project. And people go, well, why are you doing that? Well, it's the quickest way of getting this project built. And it's the quickest way of de-risking this project. It's not optimal. As I say to people, you know, if we had a choice, we wouldn't do it. But being in Chile and knowing that it's very difficult to get approval to pull water from the ground, it's difficult. So we've taken years off the development of this project by trucking water to it. And the ultimate phase for its expansion would be to bring water up, and I'm talking about desal water, from Copiapó, which is our nearest regional centre, to the project 140 kilometres by pipe. And that's the study we want to do, is to determine how we're going to do that. Are there third parties that can do that for us? Do we have to pay any of the CapEx? What is the OpEx likely to be? But I can say very confidently the OpEx is going to reduce considerably due to the fact that we're taking this trucking scenario out of the equation. And so once that study is put on the table, people can see, wow, this project can grow to 250 to 300,000 ounces a year, and the costs come down because it's, you know, bulk mining unit costs come down, and it looks like a pretty damn interesting project at that stage.
Okay, so the first, that was going to be another question from Jordan on the expansion. So you're starting out with the first phase is 20,000 tons per day, and you're going to accomplish that by taking wastewater from Copiapó, trucking it up there, you know, which isn't good for taking a shower, but it's great for leaching gold. Then you're going to once you got that up and running, and you've proven that it works, you got in the works now, getting a permission to pipe it up there, which will do away with all the trucks and all the fuel well, not all the fuel expenses, but a lot of the fuel expenses in bringing the water up there. Is that accurate?
Spot on.
Okay.
You're spot on.
Okay.
And so, you know, that is nice to be able to do. When I say nice, we've got manageable CapEx at $135 million for the starter project. And, you know, the expansion capital, as we did at La Arena, and we did it, well, Shell Window is a different story, but let's say La Arena, we started La Arena at 10,000 tonnes a day order pad. We quickly expanded it over 2 or 3 years to about 50-odd thousand tonnes of order pad. And, you know, the production rate went from tens of thousands of ounces to 220,000 ounces a year. And so we know how to do that. We've done it before, incremental expansion of gold oxide, run-of-mine heap leach projects. So I think people should be very comfortable about how we're approaching this project. And because of our track record in the past, we know what we're doing in handling this type of project.
Okay. You know, what was the altitude at Rio Alto?
Okay, so La Arena and Shell Window were about the same altitude. They were about 3,500 meters above sea level, 3.3 to 3.5. Phoenix is between 4.6 and 4.9. So
Okay.
we're a lot higher.
Is there any I guess what's the word you know, things that challenges that could be with that, like with the heap leach, it's got to freeze up there, right? Do you have to put the leach lines underneath the ground?
Oh yeah, I mean you got to bury the reticulation of, you know, in the leach pad. You know, there's a lot of knowledge of dealing with that. There are, you know, if you look at Fort Knox in Alaska, that's a heap leach gold mine, belongs to Kinross. Bald Mountain, Round Mountain, Kinross projects as well, low grade. And in the case of Bald Mountain, I think it is run a mine, Heap Leach. So, you know, there's knowledge about that. What we're dealing with, and there's not a lot of snow at that altitude where we are, but what it does do is get cold, right? And winds are and cold is something we have to deal with. So yeah, I mean, we have to have a wits about us, and then the other thing is, you know, working at that altitude, like at 4.6 to 4.9. You know, the impact of altitude to the operators is something that we're mindful of. We saw it at 3,500, so we've got to be mindful at 4.6, 4.9. You know, but there's all sorts of steps you need to take from an operational perspective to minimise the risk of you know, harm to workers at those altitudes. But the thing that's coming and, you know, is already in place is automated mining, you know, where nobody drives the trucks, you know, they're all run by some guy sitting with a joystick in an office somewhere. So, you know, I think with time we're going to see, and particularly when we move to bigger trucks on the expansion case, moving that big quantity of material, you know, I think we might see some automation and other things happen in the project.
Awesome. Okay, we got questions from Leland, Mike, and Kat, which are basically asking the same thing. You kind of touched on it. Timeline to production, you're thinking end of 2025?
Yeah, I mean, it really depends on the financing. What we're looking for is the ability, we're looking for a construction window, and that construction window in Chile at those elevations is between September, October, and March, April. And so we're in one now, but we're not going to finance it anytime soon. So we've got to wait for the next window, which is next September, October, right? So that's 8 to 10 months away. If we can get the right sort of financing in place and we jump into that window, we should be producing gold towards the end of 2025. So that's the target. Can we achieve it? It really just depends on money, right? So, I mean, if we were fully financed now, we'd be gearing up to jump into that window as early as possible. The good thing that's happening right now in South America, good from our point of view, bad for agriculturists and other people, is that we've got a very strong El Nino happening in South America, and I think it's impacting North America, and it impacts everything. But what happened was in this summer window, in the last winter that's just finished, there was very little snow, very little snow. In fact, I think there was hardly any, so let's say no snow. And that was because of El Nino. Now, if that carries on, and I think this is going to be a strong El Nino, when we go into the next winter after we start production, if we get the same conditions, that's going to work in our favor. Just means we've got a little less that we've got to work around, you know, from a snow perspective. When it snows up there, it's like that thick.
Okay.
Right? It's not meters. It's not meters.
Okay. All right. So as far as realistic production, you can't even start until September. So hopefully you can get all the financing in between now and then you'll be able to start building this coming September.
Exactly.
Okay. Yarmo wants to know, when you reach the restaffing stage, any feel of how many of your previous hires are going to be returning to Rio 2?
I think a lot. It was really sad because in 22, when we were stopped, we just recruited about 80 operational personnel in Chile, all Chileans. And our objective and our culture of our business, and we did this with Rio Alto, is to employ young people and good, bright young people that ordinarily don't get a chance, but because they've got to start at the bottom, and they get controlled by whoever's above them. In our case, we look for bright young people, and we give them, we like to delegate responsibility and give them that. So they found these 80 people who only spent like a couple of months with us because they were just new recruits. They thought our culture was fantastic. They wanted to work for our company. It was completely different to what they were experiencing elsewhere. But unfortunately, we had to let them go. So they've all gone off to other things, but a lot of them are saying, whenever you guys are ready, we want to come back. So that's a really good, nice feedback that we have. And yes, the door will be open for those people, but we will be recruiting in Chile. And even though our technical team is based in Lima, Peru, which is where I live, and Andrew Cox, our CEO, he lives in Lima. That team is really an oversight team, and the operational team will be Chileans on the ground in Chile.
Okay, that's good news. That is a pretty powerful leadership method, is to give them more responsibility.
Oh
And
yeah,
most people want to take it.
yeah.
Okay, anyone but myself wants to know. Ever thought about a dual listing, Alex? So maybe we can just hit on real quick. You guys are on the essentially the Peruvian Stock Exchange under RIO. You're under the Toronto Stock Exchange under RIO, and you're under over-the-counter RIOFF. Have you guys thought of expanding out to any other exchanges?
Not really. I saw that question come in on Twitter, and it came from a guy in the UK. And I can understand him thinking, well, could this be listed on AIM? No, not really. The cost of doing that and the benefit of doing that is really not there for us. I think nowadays, with the ability of anybody to buy stocks in different jurisdictions, it shouldn't be a big restriction for people to buy stocks in Canada and or on the OTCQX in the US. Lima Stock Exchange listing was predominantly for anybody who was interested, and we had a very successful Lima listing with Rio Alto, so we decided to follow up. I mean, if we did business elsewhere, Australia, we'd get a listing in Australia, of course, if we were doing business in Australia as well as what we're doing now. But that's not on the cards anytime soon. UK, I think UK is more Africa, the stands sort of, is more attracted to that jurisdiction than it is to South America or Asia, etc., which is where there are other markets more suitable for those assets.
Okay, and Fern wanted to know about you guys had some type of new technology, right? To pull this gold using the heap leach process. What was that called?
Yeah,
What
it wasn't our technology. It was a technology that belonged to a listed company called Sixth Wave, and they're listed on the TSX V, I think, a venture exchange. And Sixth Wave have developed a polymer that replaces the need for carbon in the gold extraction part of the processing plant. So we pump our pregnated cyanide through the plant, through tanks that are full of carbon, and the gold sticks to the carbon, and then you strip the carbon of the gold. That's the simple explanation of how leaching in tanks works. What they provide is an alternate solution to polymers instead of carbon. And we started to investigate that prior to being stopped, and it looked good. It looked like a good alternative. We got to a point where we didn't quite know what the cost benefit was going to be of carbon, because carbon you've got to renew, cook it up again, clean it out, and then you got to replace it. With this stuff, with the polymers, what we understand is you don't have to replace as often. So there's some sort of cost benefit analysis. They also claim there was a few percentage points of better recovery in that process. So we'll probably reinitiate our discussions with those people. We were always thinking that if this technology was something we'd like to get involved in, that we would implement it during the expansion of the project, not the start of the project. So the start of the project will be conventional carbon in tanks, but the expansion may be polymer in tanks if we can come up with a reasonable cost-benefit analysis that justifies it.
Okay, so when you're starting out, use what you know works, and then if
Yeah,
this irons out,
what,
then
keep it simple, right? This business is tough enough, and you want to stick to what you know, and then try out a few things as you get further down the track.
yeah. Now, do you have a date on when you're going to study publish the expansion study, or is that a little too?
I mean, we what we're relying on is third-party water suppliers. Now, obviously, the company that we get this retreated water from, this retreated effluent, they could be a supplier. But there's a couple of projects being prepared in Copiapó by third-party desal water suppliers, and they're looking to form a business around providing water to multiple mines in different locations. So they build a desal plant at the coast. Copiapó is about 50 kilometers from the coast. They pump the salty water to the desal plant. They store the water in reservoirs in Copiapó, and then they pump them up to whoever their users are. So that's a concept that's being developed right now, and there's a couple of people very advanced with that. So it just depends on when we get some real cost data from those people so that we can put into a sensible study.
Okay, so you don't have enough information yet to really do it.
I don't have idea of timing yet. No.
Yeah, it's dependent on other factors outside of your control.
Exactly.
Yeah. Okay, awesome. Well, thank you, Alex. If anyone was interested in investing with your company, what's the best way to get a hold of you?
Yeah, look, I like to give out my email address. It's alex.black@rio2.com. People can email me anytime. I will always respond. We're an open book. We try and be as transparent as we can with everybody. Happy to answer questions. And I'll answer quickly. I won't, drag it out for days or weeks. So yeah, that's the best way. We're updating our corporate presentation right now, so there is none on the website. There is the feasibility study that we published last year, et cetera, and there's quite a lot of information on the project, but I need to get a corporate presentation updated, and because of Christmas and vacation time, that's sort of slipped. But hopefully by the end of the month, we'll have a corporate presentation on the website and people can read that. But reach out anytime you like. Thank you.
Awesome. We will put a link to your email in the show notes below and to the website. Alex, thank you very much for coming on the show. We wish you the best of luck. We are literally betting on it. So we wish you the best, sir.
I'm betting on it too, but thanks, Steve. And look, hopefully I can come back when we've got something to talk about. I really like to get on these sorts of interviews when I have something to talk about. Otherwise, what's the point? I've been rather quiet for the last 18 months because there's been nothing to talk about. But we're back. It's our intention to build a mine at Fenix Gold as quickly as we can. And when we've got something to talk about that and our ability to do that, I'll be back.
Awesome. Well, thank you. And thank you for tuning in. Hit the like and subscribe and share this video with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.